Hey everybody, this is Randy McMullen with Amstar Mortgage. It's Sunday afternoon. I just got a lot of phone calls, emails, and a few text messages about the Fed funds rate cut, and everybody's wondering if that's going to drive interest rates back down to maybe close to zero where the Fed funds rate's going to be. It doesn't exactly work like that, and I wanted to take a second to explain why and tell you a little bit about what's going on. So the first thing is, on Friday, the Feds injected $1.5 trillion into the economy. And a lot of people thought that might help rates, but that's really not what it's designed for. They cut the Fed funds rate by 0.5% just about 10 days ago. And what happened to mortgage rates after they cut the Fed funds rate? Between Monday and Friday of last week, rates went up 1 full percent. So the Fed funds rate and mortgage rates, they're very, very different. The Fed funds rate is an overnight rate. That's the rate that the Feds might want to loan banks money overnight. Very short-term lending. Now, it does impact some other things, like it'll impact short-term notes. It'll impact things like people are paying for inventory carrying costs. It'll help reduce the cost of the inventory. So there's a lot of good positive things that are coming out of that. So with the $1.5 trillion that went in, and the lowering of the Fed funds rate, I think what they're trying to do is to get ready, because if the coronavirus does end up closing a lot of businesses for anywhere between 4 to 8 weeks, a lot of these business owners, they just don't have the financial wherewithal to survive. So they're going to have to be able to go to a bank, take out a short-term loan to kind of carry them through a tough period. So that's why one of the reasons I think the $1.5 trillion was injected into the economy, and that's why the Fed funds rate is being lowered. They're trying to help all those small businesses survive a really tough time. Now, mortgage rates, on the other hand, are based on 30-year mortgage-backed bonds. So they've been acting very differently for the last week. In fact, differently than I've ever seen them. Normally, when the stock market goes down, you're going to see interest rates kind of drop down too. Last week we saw several thousand points shaved off the Dow Jones, and yet interest rates fell very, very quickly. In fact, the fastest I've seen, in fact, rates went up the fastest that I've seen in 30 years. So the Fed funds rate, although it's kind of related, maybe a distant cousin to mortgage rates, they aren't exactly the same thing. So if you have some questions, please pick up the phone, give me a call. We're pretty busy right now. If I don't pick up, please leave a name and number. I will call you back as soon as I can. Thanks a lot. Have a great day, and be careful out there.